South Africa's economy managed to keep its head above water for the first quarter. A growth of 0.1% has been recorded for the period. That compares to an expansion of 0.4% in the fourth quarter. Agriculture was the star performer during the first 3 months of the year, but those gains were tempered by contractions in mining and manufacturing. The Reserve Bank has made its strongest case yet for a sweeping monetary policy shift. It says that a lower inflation target of 3% could yield nearly 900 billion rand in debt servicing savings costs over the next decade. This could provide serious incentive for Treasury to show tangible support for the move. SARB Governor Lesetja Kganyago has been advocating for a policy shift for more than a decade, arguing that South Africa's inflation target range of 3 to 6% is out of sync with its emerging market peers. His advocacy has ratcheted up recently as his tenure nears its 2029 expiration and inflation has stayed below 3%. British American Tobacco says it will return to revenue and profit growth in the U.S. this year. That's despite volumes in the global tobacco industry expected to be down about 2%. Releasing a trading update, BAT CEO Tadeu Marroco stated that the group's revenue performance in the first half was slightly ahead of its previous guidance, and the maker of Lucky Strike now expects to deliver full-year revenue growth of between 1 and 2%. Previously, the firm had forecast 1% revenue growth. BAT and its peers have been struggling with declining tobacco sales. That's as consumers switch to cheaper brands or alternatives such as vapes. And while many tobacco companies have ventured into the vape category, that is now also under threat by illegal vapes. Prosus has announced that its president and chief investment officer, Irvin Tu, will step down from his roles and continue as an advisor to the group. The firm, which is controlled by Naspers, has changed its vision and strategy significantly over the past 10 months under CEO Fabrizio Bloisi. It's gone from an investment holding group to an operating technology company focused on lifestyle e-commerce. As a result, Tu feels now is the right time to move on. Gavin Dalgleish has been named CEO of Tongaat Hewlett. The firm's business rescue practitioners made the appointment, saying Dalgleish has a strong track record in the sugar industry and brings valuable expertise in the stabilization and turnaround of sugar businesses. Rob Aitken, meanwhile, who acted as the interim CEO, will resume his role as CFO. Hudeco is growing its portfolio. The groups agreed to acquire Flowsolve's trading assets and liabilities. Flowsolve is an engineering company providing industrial solutions. Their services primarily involve the handling and movement and purification of fluids like fuels and lubricants. Hudeco says the purchase is consistent with its acquisition strategy and is an ideal fit for its engineering consumables segment. The deal involves an initial payment of 45 million rand, and the overall price tag, which won't exceed 125 million rand, will be based on Flowsolve's annual profit after tax for 3 years. Further afield, China's factory activity in May shrank for the first time in 8 months. A private sector survey showed, indicating U.S. tariffs are now starting to directly hurt the manufacturing superpower. Let's take a look for more detail.
Tariffs could be starting to bite in China. On Tuesday, the country's closely watched Purchasing Managers' Index for manufacturing fell to 48.3. The May figure was well down on the month before and dropped below the key 50-point level that separates rising and falling activity. It was the first time below that line in 8 months, indicating that tariffs are now hurting China's economy. 2 weeks ago, negotiations had appeared to broker a trade truce with Washington, but US Treasury Secretary Scott Bessent has said talks are now a bit stalled. Appearing on Fox News Sunday, Commerce Secretary Howard Lutnick then accused Beijing of blocking progress.
And really the right way to say it is they're just slow rolling the deal. So I think slow rolling is the right way to say it, and I think Donald Trump is on it.
Tuesday's figures also showed China's new export orders falling for a second month, with firms citing the impact of tariffs. Employment in the manufacturing sector also fell at the sharpest pace since the start of the year. Chinese Premier Li Qiang has said policymakers are now considering new tools to help the economy. He says that could include unconventional measures.
And Eurozone inflation fell below the European Central Bank's target last month, underpinning expectations for another interest rate cut this week, even as global trade tensions fuel longer-term price pressures. Here's more detail in this report.
Eurozone inflation eased below the European Central Bank's target last month. Official data showed Tuesday consumer price inflation in the 20 countries sharing the euro slowed to 1.9% in May from 2.2% a month earlier. The numbers supported expectations for another interest rate cut this week. That's despite global trade tensions driving longer-term price pressures. Data showed a fall in services price growth saw a closely watched reading on underlying inflation slow to 2.3%. That figure removes volatile fuel and food prices. The ECB has cut interest rates 7 times since last June. Another move on Thursday is almost fully priced in, given a number of factors pointing to easing inflation. It includes muted wage growth, easing energy prices, a strong euro and mild economic growth. Some investors think the ECB will pause with rate cuts after June and only make one more cut this year. But policy hawks have warned inflation could go back up soon, given unusually high geopolitical tensions.